Bitcoin has seen a large degree of short-term volatility within the last 24 hours. In today's video, we're going to dive into the short-term charts and discuss the price action, run a technical and structural analysis, and talk about what will happen next. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin on the smaller time frame, as we have seen quite a large amount of volatility into the market within the last 24-hour period. We have seen quite a large move toward the downside, followed by an equally large move upwards, and then a significant drop all the way down to retest low $27,000. In today's video, we're discussing the short term, the next move for Bitcoin, the higher time frames, the technical and structural data, and the market data. Now, before we get into it, smash the like button, hit the comment button, and of course, subscribe to the channel, guys. We do daily videos on Bitcoin. We focus on the charts, the technicals, the data, the price action, the facts, the objective realities, no bullshit, no shilling, no emotions, pure raw data. You can also find us on Telegram, guys, if you want more information, access to the second link down below. You'll get access to updates, charts, videos, analysis, information, educational posts, news events. So much in here, guys. I highly recommend joining. If you're interested and you like our content, this is a great place to be to get more of our content throughout the days between our videos. You can also join us over here, guys, on Bitget to trade where I trade. If you want to support the channel, this is the place to be. So many benefits, guys. No KYC, and you'll get 15% off your trading fees. Highly recommend joining up and trading. If you're interested in our VIP channel, you'll get access to trading signals such as this one over here, guys. Entries, targets, stop losses, everything is breakdown for you, such as this one over here. Entries, targets, stop losses, everything perfectly laid out for you guys. Including in the VIP channel, you'll get access to group chats, our trading group chat, our general group chat, help and direct messages, and extra video, guys. Everything is in here. All membership information can be found in the pinned comment in the free channel. Go ahead and click it for more information. Let's get into the video, starting off with the market data for the month. Currently, we're about 3 days in. We're on our 4th day, about 3 days in for March currently, and we're looking at a negative 1.95% for March. Again, only 3 days in, haven't had too much price action. And if we look at where the price action is, we are still moving between quite a large horizontal range, right? If we go ahead and draw up, one second, where's my drawing brush over here? We draw up our range over here. We can see our upper range, okay, our upper bullish trigger, and our lower bullish trigger. We've got quite a large range over here. Percentage wise, this is about a 7% range. So we are seeing a lot of volatility, and we're going to see a lot of volatility within this range until the range actually breaks. And that's when the next directional move is going to occur for the higher time frame continuation, which will then sway the percentage for a month in each direction. Whether it be a break upwards, we're likely to continue. Whether it be a break downwards, we're very likely to continue downwards. Moving back to the data, guys, we can see 30-day volatility is sitting at 3.48. Now, something very interesting on the 30-day volatility right here, guys, we're starting to see it actually come down a little bit. Now, it is very much still plateauing. If we look at the last, say, month, we look at the last 30 or 40 days, okay, we'll zoom in a little bit. We can see we've had a steady increase in volatility from around 2% on the 30-day period to around 3.5%. But ever since the 15th, 14th of March, we have seen volatility plateau and start to slowly trickle downwards. This is very significant, guys, as it suggests a decrease in volatility at a major resistance point. You would know that a decrease in volatility is tied to momentum, as volatility is one of the components of momentum. Momentum, volatility, speed, and velocity. When we start to see volatility drop, we can assume that momentum is also falling, and we can prove momentum is falling by our momentum indicators. This suggests that the overall trend moving into this resistance is doing two things. Number one, consolidating. Okay, very obvious. We're seeing consolidation. Number two, decreasing liquidity, decreasing volatility, decreasing momentum, and decreasing volume. And number three, the most significant one, it is weakening. We're seeing weakness in this trend at resistance. We'll come back to it. But that is why our volatility is very important. What we're seeing in the last 24 hours, we're seeing volume up 66%. We're seeing liquidations up 49%. Again, that is expected as we see these larger swings. We look at the last 24 hours, right? We're seeing quite aggressive swings both to the downside and to the upside, you know, this is quite a choppy price action range over here. So we are expecting to see a little bit of volume kick up, a little bit of volatility in the short term kick up, and of course, more liquidations to follow as we see that price action become a little bit more active in its direction. So looking at those liquidations in the last, say, 24 hours, we could see we had a bunch of shorts liquidate as the price pushed upwards. A lot of people, guys, a lot of people jumping into longs right at resistance. You know, we don't want to be jumping into longs at resistance. We draw our uptrending resistance line over here, that same resistance line we broke down. We can see a very clear reaction at that point, a very clear rejection that resulted in a continuation back down. A lot of people are jumping into late longs here. Thankfully, guys, if you are in the VIP channel, you would know, guys, you would know that we actually shorted that resistance right over here. You can see we shorted that resistance for a nice profit. We end up making around 100 to 200%, depending on your leverage, or 50 or 100x on that short, guys. You have to think outside the box. The best way to think is, where are the majority of people putting their stop losses? That is where I want to be putting my entries. Where are the majority of people entering longs? That is where I want to be looking to enter shorts. You have to think the opposite of retail, because retail always gets wrecked. Let's go to the market data and the general market. So DXY has seen quite a large drop, guys. I didn't expect this. I thought we would have seen a push a little higher. We actually only hit 103. I was kind of expecting a move to 103 to 103.5-ish. We didn't see that. We got rejected at 103. We've come back down. We have found support once more in the support range. So we technically do have another shot to break upwards here and continue upwards. Again, this is very still relevant. And we do expect a move to this range over here as we are bouncing this horizontal range until this lower support is lost. So expect a continuation upwards for the DXY today, which will bring the markets down until we lose this 101.8 area, this lower support range. We do not expect a continuation downwards, guys. Looking at the S&P 500, we did break, Dow Jones, sorry, we did break over this neckline of resistance. Again, as the DXY drops, we are going to see the traditional markets rally. We had seen the traditional market rally over here, but again, nothing too significant. We do need to start clearing some of these upper resistance levels. As you can see with this diagonal resistance sitting around this level over here, we do need to clear. More importantly, this neckline of resistance right over here, we do need to clear for a continuation upwards. Not expecting any sort of strong impulse up until around 34,500 is taken out. Until then, we still do have the potential to come back down and retest these support lines, but it is definitely looking better. Okay, it's definitely looking better. Again, guys, we've been bullish on this ever since we came down and created these local highs over here and started pushing upwards. Looking at the S&P 500, same thing. We've been bullish ever since we came down and started to retest these lows over here. That is when we've been bullish. We did really say, if we break over this neckline of resistance, we're going to see a large move upwards. This is our next major move. Our large move will take us to around 4,300. The biggest move on the S&P 500 will occur above 4,300. If we break over this level over here, we're going to see a huge move, and that will kind of kick off as Bitcoin breaks 30,000, as the DXY continues down, as the Fed maybe even pivot. We're going to see more large moves upwards. However, until we get there, we are still under these two major resistances. We can still come back down. We can retest these lows if the market spins around, if the DXY pumps. If the Feds announce something negative, we could still see this stuff occur. So keep that in mind. Not out of the blue yet, okay? Let's get into Bitcoin, guys, and talk about the price action. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Start off on the macro, then come down to the short term. As we said already, guys, we have seen Bitcoin retest 30,000. 30,000 is a very significant resistance. It represents the yearly low of the prior range. You're probably so sick of me saying this, we're going to go over it again, but it is incredibly important for our new viewers. Our 30,000 range is the yearly low of the prior bull run. This is the 2021 bull run. You can see we had yearly support here, we had yearly support here, we had yearly support here before we actually crashed. Now we know it's a massive support because we've had 3 points of test, 1, 2, 3, and when we lost that, we saw a massive reaction towards the downside, okay? That indicates this is the area of humongous support which you've lost. When we turn huge support and lose it, it turns into massive or equally as strong resistance. That is what we're testing right now, okay? So a lot of people are saying, we're going to move through 30K, we're going to explode. And yes, if we get past 30K, that is going to happen. But we are not past 30K yet. The reality is, we're at 27,800. We're underneath the current major rejection zone. We're underneath the current major resistance. If we are under resistance, resistance is still resistance until it is not, and therefore we do have to anticipate a potential rejection at this range. Now, as I've been saying this entire time, we've been bullish, remember, since 18,000 here, we bought 16,500, and we bought 19,200 breakout, okay? As I've said this entire time, we are still in an overall uptrend. This is still an uptrend. There's no reason to be selling spot bags completely here. Take some profits from your spot bags, look to scale out of your higher time frame long positions. Again, these positions can be retaken above 30K, but prepare for a potential rejection and position yourself to capitalize on the rejection toward the downside if it does occur. If we do reject from 30,000, our next logical target is going to be the next major support. Where is that sitting? 25,200 to 24,400. Again, these aren't random numbers, guys. We can confirm all of this stuff with our volume ranges. If we bring up our VRPV, we can confirm these ranges. So let's go VRPV, let's adjust it to a 200 row size, and we'll show you. If we take a look at where our volume starts to pick up again, it picks up again directly at 25.2K. Therefore, we know 25.2K is a major support, and we have seen it act as a major resistance twice. Major resistance turns to major support, and therefore we know this range is going to be a major support range, hence why we have outlined it. If we move upwards from there, what can we see? If we go back to the VRPV, which I'll bring up again, I don't know why I got rid of it. We can see, guys, if we move upwards above 30,000, we can see that the volume range significantly drops off until we push to around 40,000 again. Okay, sorry, increases, my bad, increases. What does that tell us? Well, it tells us if we push past 30,000, which is a major resistance, okay, we start to see an increase in our volume range on the VRPV. You can see it over here as it's increasing, right? We're getting steeper. That suggests this range between 30,000, okay, and 40,000 is not a resistance range, but it's a range of higher price action. It's got more historical trading orders, it's got more orders, it's got more volume, it's got more liquidity. Generally in those ranges, it is harder to push upwards through. So what we expect is if we enter this range, volatility is going to decrease as the price continues upwards, okay? If we push past 40K, we can see the opposite. We can see the VRPV drops. It suggests that our resistance within this range to 48,000 decreases. Volatility will increase in this range and price will speed up throughout this range, okay? And the same thing happens over here. We can see these humps, these little bumps in the VRPV indicate areas of increased historical trading orders, increased liquidity, increased resistance, okay? That is how we use the VRPV. Moving down, guys, as you can see, if we look down on a smaller time frame, if we drop below our 27,000 range, okay, which is this peak over here on the VRPV, we're dropping really small. You can see we are developing a decent amount of support over here, around 27,000, where it really starts to flatten out. We have a massive gap here on the VRPV, suggesting a loss of 27,000 is going to enter us into a low liquidity range. That is going to result in increased speed and velocity towards 25K. A move below 27K to 25.2K will happen quickly, it will happen fast, and it will happen aggressively if it does happen. So let's go back to our short term. look at where our support ranges are. 27k right over here. We can see in the VIPV. As soon as we drop below this range, we have an instantaneous drop off in this liquidity range over here. Our historical trading range over here, our volume range, our order range has dried up. It is much lower historically, therefore it's going to be the easier move toward the downside if this support level is lost. Alternatively, the same goes to the upside. In the short term, we have very, very low orders above 28.8k. Therefore, we know that 28.8k is our higher time frame bullish trigger represented by this green box, and 27k is our higher time frame bearish trigger. As I break below these respective resistance levels, puts the price in a situation which could facilitate more aggressive price action in the direction that it broke up from. Okay, so a break above 28.8k is going to result in increased speed, increased velocity, increased volume. We know that all those three things result in price action. All we would not have at that point is momentum. Now, would momentum shift if we broke above 28k? Well, let's take a look, guys, at the daily chart. Would the momentum shift if we broke above 28k? So let's go ahead and get rid of that one, but it's already got that one up. Let's take a look, guys. So bring up the RSI. On the daily chart, RSI, we can draw in a trend line of this entire range. We can see, okay, yes, momentum would shift above 28k if we have not only a price action break above 28k, but we have the RSI break upwards here at the same time. If we get the momentum to break upwards right over here on the daily chart, okay, and we get the price over 28k, meaning volatility, volume, and speed all have increased, that will facilitate a strong move upwards to retest 30,000 upper resistance, where we'll either reject from or break above. Again, guys, 30,000 is a yearly resistance, and therefore for a confirmed break, we need a monthly candle close. However, the short-term move, we're looking at those 4 trigger points. For the downside, we expect the same thing, guys. We can see volume, we can see liquidity, okay, we can see volatility, we can see velocity, we can see momentum, we can see all of these 5 things increase upon a break up of resistance ranges or losses of support. Okay, guys, think about where all of the long stop losses are placed in this range. They're all placed underneath 27,000, guys. So we drop below this level, those longs are going to liquidate. We're going to see a surge of volume, and the price is going to push down very aggressively through this very low resistance range to 25.2. Again, while we're in this short-term range, we are expecting bounces in the intraday between these smaller time frame supports. But if we're zooming out to the next move on Bitcoin, the higher time frame move on Bitcoin, we are looking for those triggers on the higher time frame, such as 27, such as 28,000, guys. Keep those in mind. Let's go ahead and dive into the small time frame, then run a technical analysis, then finish up the video. So on the hourly chart, guys, we can see we saw a aggressive breakdown over here. Took us down, we formed the new support. The new support was the local tops over here. We saw a support at around 27,600. We bounced upwards, we retested this uptrending resistance, the same hourly resistance, the same RSI resistance, okay? If we look at the RSI over here, we had quite an aggressive momentum shift, okay? We saw a retest here, which was, of course, this rejection point. We saw the breakdown over here, triggering the breakdown here. We pushed upwards. Now, this is where it gets very interesting, and this is why I always talk about double confirmation. Momentum is a leading indicator, okay? We need to see confirmation of momentum and price action for confirmation direction, okay? Direction equals momentum and price action. Price action equals momentum, velocity, volume, and liquidity, okay? We can break it all down. All of those are internet connected. We can use a group of one thing to solve for the unknown property we're looking for, and we can use that to determine the direction and create a narrative around the direction and then apply probabilities. So how did we know this was going to be a short? Well, we saw momentum push past our resistance, okay? But we saw a rejection on the price action. We saw a massive, large wick on this hourly candle pushing up to a local resistance on the POC line on this price action over here, indicating the price has retested the resistors. It's broken down from the diagonal, unable to push above into the liquidity zone, grab liquidity, and then we saw momentum come back down. This indicated a fake out. This was a fake out. This was a bull trap. It trapped a lot of longs, and the price came back downwards. So we can use momentum to confirm fake outs as well, not just validate breakouts. In that instance, we saw a breakdown, we shorted, we massive profit, really good to see. We've pushed downwards, we've broken through this range over here, exactly the same thing guys, we saw a massive liquidity grab over here, prices pushed upwards. On the smaller time frame now, the price is bouncing between supports and resistances. We go down to even a 5-minute chart, we'll see in a bit more detail. We have developed a smaller range over here, okay? We have a decent amount of resistance in this range. We have a diagonal resistance from this current wick downwards, okay? You can see a diagonal has been retested. We are up against this resistance point over here. We have a nice little jump up over here in the VRPVs, again suggesting a liquidity zone above this range over here. That is our diagonal, that is our horizontal. We know if we break this horizontal and diagonal, we will continue upwards to our POC, but until then, this is resistance until it is proven not resistance. We can see that on the RSI, we are starting to see a degree of weakness as we have overall decreasing RSI over here, okay? It's converging between our trend lines. It is coming down, it is retesting our uptrend on the RSI more and more. We can see the RSI is converging slightly toward the downside. If we do get a break on the RSI downwards, we can expect the price to move back towards our liquidity zone or our next support, guys, okay? Again, the short term, it is very choppy, it is very volatile. I highly recommend avoid trading it too much unless you are experienced. Rather zoom out and focus on the higher time frames, right? The higher time frames are so much easier to trade than the short term. Definitely only trade the short term if you know what you're doing, but focus on this higher time frame right now. If you want to look at the next move for Bitcoin, we are looking at this structure. We are looking at what happens next from here. Let's zoom out to the higher time frames. Okay, what we're looking at here is our Gaussian channel, and we're looking at our Bollinger Bands and market size A. We'll start on the Gaussian channel. What we can see, guys, is we have actually closed a weekly candle above the Gaussian channel on the midline. Now, this is an incredibly bullish thing. This is very, very good to see. Every single time on the weekly, we have closed a weekly candle above the Gaussian channel. We have always continued upwards. Every single time we close a weekly candle above the Gaussian channel, we always continue upwards. By upwards, I mean we continue through the Gaussian channel and we break out of the upper band of the Gaussian channel. So if it had to repeat this instance, we would see a break of the upper band of the Gaussian channel and a continuation upwards, guys. Very important stuff. The upward move will take us to around 40,000 as per our next major higher time frame resistance, as it is sitting around 40,000. Remember on the VIPV we showed you, we see a massive jump in resistance around about that 40,000 range right over here. Okay, so the VIPV is suggesting that the higher time frame Gaussian channel break is a really bullish sign. It's a great sign to see. Very rarely do we see breaks over midline and rejections, but in this particular instance, guys, what trumps this indicator? What is more significant? This indicator or all of the data we have that we are experiencing weakness in this trend at resistance, okay? Our drop in volatility, our drop in momentum, our drop in volume, our drop in liquidity on the small time frame or the daily is more significant than, okay, than a weekly candle close above a moving average. Very important. Although this is really good to see, it holds less significance compared to this. Okay, guys, I'm going to leave the video there. Hope you enjoyed. If you've got any questions, leave them down below. Hopefully we'll see a little bit more price action in the next couple of days. So we have more to talk about. We do want to quickly mention, we do have economic data coming out. This is data you want to be looking for. The main ones we're looking for, of course, is on the 7th of April, so a couple of days, NFP, guys. The next main one we're looking on the 12th of April, obviously CPI and core inflation. And then moving down, we're looking on the 13th of April, we're looking at PPI and FOMC, guys. Some big meetings coming out this month. Some really determining factors. Again, this can shift. It could break, it can make the current narrative, it could push the prices, it could alter the prices, it could cause a lot of volatility. And I really actually don't expect too much price action for Bitcoin in terms of macro directional moves until after FOMC. So we're looking at around another 9 or so days, 8 or 9 days, where we're gonna still experience this little bit of a chop, a little bit of price action sideways until we get a huge directional move based on the data release of FOMC. Thanks guys for watching. You can go ahead and join the Crypto Academy courses if you haven't already. 10 units, all information you need is over here. Contact us on this email. You find out all about the course. We give you all the information. It's good to check it out. If you don't like it, that's fine. But if you are a new trader, if you're interested in learning technical analysis and learning what we do and what I do, this is where we teach you. So go ahead and check it out. Thanks for watching. Catch you tomorrow.